Hey guys, David Robinson here. Welcome to the Apartment Investing Journey. As usual, we've got another great guest for you today. Really excited to dive into my conversation with Dylan Palmer. Dylan, welcome to the show. Appreciate you coming on.
David, thank you for having me. I'm excited to be here.
So Dylan is an acquisitions analyst for Urban Renewal Partners, where he is responsible for underwriting and analyzing potential new multifamily syndication acquisitions across the U.S. He assists in the development and completion of offering packages and due diligence of each investment opportunity. And outside of URP, Dylan is responsible for tracking, analyzing, and forecasting financial processes for his family's investment company, KP Wolf Properties. So, Dylan, obviously a very, very short bio. There's a lot more to your story, and we're excited to dive into that. And our podcast is all about the journey, as we say, and so we would love to back up and talk a little bit about your background and how you got into the space and where it all started for you.
Yeah, happy to jump right in. My journey per se, I guess, started way back when I was younger. I was very fortunate to be kind of born into a situation where my parents were involved in real estate investing ever since I was a young kid. I guess when I was a baby, 20 years ago. And they solely focused on single family homes, right? So my dad, he read the Rich Dad Poor Dad and started thinking about income streams and investing into real estate. And over the last 20 years, they've built a portfolio of about 6 single family homes. Now, with that being said, during that time, I was never forced into it or really kind of got behind the curtain when I was growing up. I always knew of it. I always knew my parents were invested in real estate, but I never really, even like had the interest of asking, questions until I grew up and kind of came into, high school and college. Now, I've always been very, math centric and analytical by nature. So math was always my strong suit. And with that being said, I got really into physics in high school, and I'm like, okay, I could be a physics major in college, making money, right? The whole W-2 spiel of, make a great income, work for 25 years. And I was excited. I was pumped. And then I hit my freshman year of college, and I realized that it just wasn't the right fit for me. It wasn't the right, the crowd that I really saw myself, in college. So I made that switch after my first semester into finance. And I fell in love, right? Because it kind of took the application and systems of mathematics and applied it to real life situations. And in this case, when you look at finance and you think of financial markets, it's all the stock market. So that's how I kind of got my initial foot into the door, was through, evaluating stocks and companies and kind of seeing, taking the current baseline of income and revenue and then subtracting expenses and kind of mapping out what the actual fair valuation of a company is. And it got me super excited. And it wasn't until my junior year when I started, really kind of diving into, kind of asking my parents questions about real estate investing. And that ultimately led to commercial real estate. And when I was, as I transitioned over, I always thought you had to be a part of the residential side first to kind of go into smaller deals or single family homes before going into commercial real estate, because commercial real estate was a different kind of whole new atmosphere than I had ever, learned about before. And I was hooked. I dove straight in, and I really attribute a lot of the connections that I made and experience that I had earlier on to LinkedIn. LinkedIn is a very powerful platform and social media platform to where I was able to kind of have a sense of credibility, even though I was only just beginning, because the platform is seen as a professional network. I leveraged it and messaged every single person that was in commercial real estate, whether it be brokers or owners or someone just affiliated third party, and started asking questions. I jumped on the phone with them and asked for 15 minutes of their time. And I had this list of 10 questions to where they're, I kind of learned what were their biggest challenges, their pitfalls, what was a big moment in their pivotal career. And my last question was always, what's your biggest challenge right now and how can I help you? And I eventually met a guy named Gary Martinez, who was having, trouble with outreach. And I'm like, hey, I speak English. I have a phone. I'm more than happy to jump on the phone and make some outbound calls for you. He took it very well, and I started making 200 calls a day for about 4 weeks. And then during that time, I was able to get him 2 leases, and he started to invest in me. And at that time, he asked, what do I want to do? And I told him specifically that I really wanted to get in commercial real estate, and that I loved the fact of being analytical. Because when you look at commercial real estate in general, at the most basic level, it's just like valuing a company, right? You're looking at a business, you're looking at the income streams, you're looking at the expenses, and can you purchase a building and can you increase their income? Can you increase their revenue through operations or decrease their expenses? And if you can do that, you can increase the value of the company or the building, and you can sell it for a much higher price. So that's where it fascinated me, the whole fact of being a real asset and something that could be personally changed through creative aspects of the business. And he introduced me to a guy named Robert Lee, and Robert Lee is big into the medical space, and he just happened to be starting an apartment arm during that time. And he brought me on as an acquisitions guy. And that was kind of led up to the moment of me getting into commercial real estate and kind of my journey before then.
Oh, that's great. And so are you still working with Robert and Gary today at this point?
I no longer work with Gary. I still talk to him every once in a while, kind of updating him on my journey. But yes, I do work with Robert, and Robert is part of this deal here.
Okay, cool.
Mm-hmm.
Well, that's great. What a great story, and what an inspiring story for young entrepreneurs that want to get into the real estate investing, commercial real estate investing space or commercial real estate brokerage space, where, here you are making a big shift from, physics to finance. And then realizing that you wanted to get into commercial and not knowing exactly how to enter the space, really leveraging social media, LinkedIn in particular, to make contacts with a lot of different people until you found someone who was willing to give you a little bit of a shot. When the reality is you were actually adding value to him by putting in some sweat equity and jumping on the phones and making some calls and getting things set up for him. A lot of people ask, how do you get into space? Well, here's a perfect example of how to get in the space when you don't have a track record and you don't have anybody that's just going to pull you into the space. So good for you. That's fantastic. So where did things go from there? Robert was starting this apartment arm of his company, and you became the acquisitions guy. What did that role look like for you? And just to give us some time frame, when is this? What year is this?
Yeah, so when I started reaching out on LinkedIn, I was very thankful. It kind of was perfect timing because it was right at the beginning of COVID. So back, March 2020, where a lot of professional schedules started to slow down, right? So I was able to kind of jump in at the right time where a lot of people had free time, and I was able to make those connections. And then I met Rob probably about a few months later, right? So kind of getting into the summer of 2020, and that's when he kind of brought me on as the acquisitions guy.
So this is perfect. Yeah, let's talk about that process. Someone who's completely outside of the industry, has limited experience, gets pulled into the space. What's it like to dive in post the peak? Well, I mean, in the middle of COVID and trying to be on the acquisition side of things. What does that look like for you?
Yeah, and it's so funny you asked that, because it isn't until now that I realized that there was a whole different aspects of reaching out and connecting and networking and meeting brokers. Where at the time this is all I knew was that I can get on the phone, right? I can meet these brokers, and I was very fortunate to where, because it was during a time when most people weren't meeting in person, it was like I was meeting them in person, because that's what everybody was doing, right? So I was able to get on the phone and meet with brokers, and Rob was really able to kind of guide me in that process, because unlike any other industry, and I could be wrong, but real estate is very there's not much knowledge out there, or you can't really learn everything. You can't learn 99% of the business without doing it. And that's where leveraging someone who is in a position to be a mentor to you, to someone who has done it before, asking them questions and really, leveraging their expertise in order to guide you through the process. Because even today, right? So, a year and a half later, almost 2 years later, I still learn new things every single day. And it's one of those things where, professionals who have had their career for 20, 30 years, they're more than willing to help you out, because they know exactly your position because they were once there in their own shoes.
So, and when you got started with Robert in the as the acquisition on the acquisition side of things, what did that role look like?
Mhm.
What were you tasked with? What did your day to day look like? And what were some of the strategies or tactics that you deployed in that role?
Yep. So my day to day was really focused on, broker networking, outreach, underwriting, creating a pipeline. So like the first few weeks, we're really honed in on making sure that we were on everybody's broker list. We really wanted to focus on the Southeast. So it'd be, Kentucky, Tennessee, North Carolina, South Carolina, Alabama, Georgia, Florida, a huge net.
Yeah.
And when we started, it really was getting on the phone, talking to brokers, seeing what deals they had, and underwriting their deals, and being kind of one of the biggest things and action steps for someone that is on the acquisition side or is learning underwriting or wants to kind of hone in their skill or create stronger relationships with brokers is after I underwrote a deal, more than likely your price is going to be different from what the broker is selling, right? And for you to get on the phone and kind of walk through what are your assumptions, right? Where do you see rents? Where does a broker see rents? Why is there a mix there? Where do you see expenses? Where do they see expenses? And if you to kind of cross collateralize each other's model, there's a lot deeper understanding, and brokers really appreciate that. Just from my experience, because not everybody does that. There's a lot of people who say, "Hey, where's guidance?" They get guidance, they underwrite it, they don't like it, then they just kind of move it on, right? Without telling the broker. And that's where, being able to get on the phone and kind of walk through your underwriting not only helps with, understanding the deal from both perspectives, but also, being able to hone in and get a keen understanding for, getting better at underwriting, right? Getting better at a market, understanding where the market is. And that was a big, I think strategic move that helped me grow in the early stages of the acquisition side.
Yeah, and I love that. And to get a little granular here, but let's just go down to the very, very bare bones. When you said, all right, we're going to focus on the Southeast markets, let's go and let's connect with all these brokers. From a very granular perspective, someone that's in your space, that's maybe they're focusing on the Midwest or the Mountain West or whatever it might be, or the Southeast, and they want to start building up their brokerage list. Like, what tools did you use to connect with brokers? Were you, pulling lists from CoStar, were from other sources? What did that look like from a very granular level?
Yep. So, and I love that question. It's I went on LoopNet and I looked on, basically they have kind of like their form of deal makers that CoStar has, to where it has all of kind of the brokers in a specific area. And they have their emails, they have their contact information. And if they don't, I would go on, I would look up their name and find their email or phone number. And I had a list, and I used HubSpot. HubSpot is a very, easy, free tool for what, a lot of the systems that I use. It's all free. And I would basically just track all of the contacts. And in there, you could also track the deals. As you get sent deals, you can put the contacts to the deals, and you could set reminders to yourself, maybe 2 or 3 weeks out, just to kind of follow up and just send them a quick email saying, hey, it's been 3 weeks. Is there anything else new for me to look at, et cetera? That was, 2 tools that I definitely used during that time.
I love that. And when you were making the outreach, obviously you mentioned the importance of giving the brokers some feedback on the deals that they do let you know about, even if it's not a match for you. Is there anything in your initial outreach that you learned that was effective in fostering a relationship beyond just the initial email or phone call? Is there any strategies, tactics, anything that you would say or do, or a way that you would approach the brokers that would help you get to, having a little bit better connection on the next outreach that you might be able to share? Maybe there isn't, maybe there is. I'm just curious.
Yeah, and it makes me think a little bit if there was anything specific, and I think more so the importance of, I'm a big believer in, basically touches, right, or conversations, staying top of mind, because whether it's today 3 months, 6 months, a year from now, when the broker, he will eventually, have a deal that he has, he has to sell. And who's that first person he thinks of, right? It's more than likely going to be someone who he's had a long relationship with. But then if someone's new, if you're that person, if you had like 3-4 conversations with them within a month, you're providing good feedback, and he's the first person to think of, you're going to get sent that short list deal that may not be on the market for very long, and you could be the first one to look at it.
That's exactly right. Yeah, love that. It really is there. I mean, there's no magic sauce to it, right? There's no magic script or anything that you can use to get in. It's just consistency over time. And a lot of people stop at that first effort. They make a phone call to a broker. They realize that they don't have a deal right then and there. And so they move on. And maybe they're casting their net a little bit too wide instead of staying focused on a handful of brokers with consistent, valuable communication. So love what you did. So let's push the conversation forward a little bit, and let's move on to your acquisition in Lexington, Kentucky. If you can, talk to us a little bit about how you sourced this deal. Maybe it came from one of the broker conversations that you had, but let's hear about how you sourced the deal, and just tell us a little bit about the asset itself.
Yeah, and just to backtrack just for a second, because you made a really good point there about casting a big net. One of the things that that I learned was that having solid relationships with 3 to 5 brokers in each market, or even 2 to 3 brokers in each market, is a lot more advantageous than casting a really wide net and being in touch with 15 brokers. Just because real estate is a people business. So having better relationships with a smaller amount of people is a lot better in the long run versus having a okay relationship with 20. Now, that happened. So, now fast forwarding to this deal. So when I started, it was 9 months and, $124 million worth of deals with nothing to show for it. Right. So there's definitely a lot of, ups and downs, and especially in the market that we're in right now. Everyone, always talks about, you're seeing crazy prices, right? And it's very difficult when you have properties on the market and you're trying to make them pencil. To where kind of getting those off-market deals is where you'll have the ability to get something before others see it is really the goal, right, in this kind of market. Now, we've had a really good relationship built over the last 9 months, right, during my time with a broker here in town, and this was just a direct off-market guy who bought it 12 years ago because his wife wanted to open up a workout studio right behind me here. 6 years later, the wife and the partner had kind of a falling out, and he's been stuck with the property, for the last 6 years. And so he kind of had a decision whether he had to either acquire more assets in the area or he had to just sell. And we met him at the perfect timing where we were able to act really quickly. I'll never forget it. It was, it was a Friday, it was about noon o'clock. Right. And during, we had buddies that started coming over, right. Because I was very fortunate where I lived like right on the sand in San Diego for my senior year. And I'm out there, we're underwriting deals. We're pushing really hard to finish this week out. And, we get this deal across our table, right? We have 2 offers out already in the day, and we get this deal, and I have to underwrite it, as quickly as I can, just to have it make sense and see where we can make an offer on it. And friends start to come over, as music starts to be playing. I got my roommates are ready. It's the weekend, right? And so I literally had to step outside of my house, go next door where there was a little patio, put my computer down, as everyone's out on the beach hanging out. And I had to underwrite this deal. We got the offer out. We got the LOI out before I guess it'd be like 3 o'clock, right? So time right before the nighttime here and on the East Coast. And it's like that kind of first 9 months, however you look at it, however many deals that you look at and that don't, come to fruition. It was leading up to that moment right there, right? And it was that final push where I could have easily said, "Hey, I'll just worry about it, on Monday," right? I could just let's have a good weekend, and then I wouldn't be where I am today, And it's just funny to look back and say that, okay, that extra push, right? That kind of, the love for the game is what ended up, putting me in the position I am in today. So I was really thankful for that. And that's how we found this deal. We were the first ones. We were the only ones. We were quick, same day, made an offer out, offer got accepted, and we were underway into due diligence.
And just to clarify, I think you did say that it was through a broker, but
Yes.
he
Yes.
brought it directly to you guys to take first look at it. Okay,
That's right.
perfect.
That's right.
Cool. And just describe the asset for us. What was this deal?
Yeah. So originally, we were focused solely on apartments, right? Multifamily. But this deal was a little bit different in the fact that it had a mixed use element, right? So there's 6 retail tenants and then 31 apartment units behind it, right? So you can see if you're watching on YouTube right now, or if you see it on the Zoom, the retail tenants are right behind me, and that just added a whole new element to underwriting, right? Because you're taking, basically when you're underwriting a mixed use deal, you have a combined property of apartments and retail in this case. You got to break them out, underwrite them separately, right? Have the apartments on one side and then the commercial space on the next, and then end up winding them back in together to get that mixed use, net income and expenses to get your new, collateralized number. So that was a whole new aspect that I learned. I had to have 21 versions of my underwriting, right, in my files by the time we were done with due diligence.
Oh, that's great. And so anything unique that happened during the due diligence phase that was noteworthy? Any challenges that you faced? Anything unique that you saw that might be helpful to our listeners?
Yeah, I would say the biggest thing, it is, I feel like I'm preaching to the choir because I'm sure your audience, knows this. It's like everyone tells you to look at every single unit, right, when you're walking. And of course, we didn't at this time. And there was one unit that, lo and behold, right after we close, we go in and there was a hole in the ceiling, right? And it was like the one unit that we didn't walk in. So that's something that I definitely encourage is when you're doing due diligence, first off, walk through every single unit. And if you're doing a value add play and you really have, reposition and renovation, have someone or be the guy who prints out the rent roll, right, in Excel, and make yourself a space for where when you're walking through, take notes, right? When you're going in and you see, you have your plan of, let's say it's new flooring, new paint, new appliances, new lighting, you go into unit 1, right? And you say, hey, okay, here, we're going to need new flooring. We're going to need new appliances. Maybe the countertops are actually okay in this unit, right? Maybe it's only painting the cabinets in this unit where if you make a detailed and do a lot of the work up front, it saves you time because you're going to have to go through that unit again if you don't do it during that due diligence, and that'll set you up to where when you're estimating costs, you can really get it down to a T. That's something that I have learned, a lot more after closing the deal, right? But now going into the next deal, I'm a lot more confident in knowing that it costs exactly $8.25 a square foot to do a full turn, right? So when you're looking at that, getting really granular up front will really help you estimate your costs. And when you're talking to investors, they'll be impressed, right? When you know that you've been through every single unit and you could break it down exactly what you're going to do, there's a lot more confidence and trust that is felt from investors when exactly what's going to happen when you're going into.
And just to give the listeners some context here, give us a rough idea of the purchase price.
Yep. So we were just under 4 million.
Okay.
So 3.625.
Right.
And that's for the 31 units and the 6 retail tenants.
Perfect. And what was the business plan going into this deal?
Yep. So when we took over, there was 40% vacancy in the apartments. The retail here was fully occupied, which was great. They're slightly below market. His wife had very, very favorable terms, right? Because he is kind of controlling future, which is great. But yeah, so it was average rents were around $512. There was 40% vacancy. Now we closed July 15th. Today is January 25th. We have 1 unit that is left to be turned. That's in the process of turning. We're 100% occupied besides that. And we're getting our average rent of $699. So it's been, yeah, and that's been in, almost 7 months now. So it's been a quick turn, and it's been a crazy, awesome experience to be a part of, and taking the time and actually being here on site has, I've been blown away. I love it. It's awesome.
So did you move, or are you just visiting?
Yep, I moved. So it's either I can learn the business from 3,000 miles away in California, or I could pack up my bag, drive across the country, and learn how the sausage is made on site. And I chose the latter, and I couldn't be more happy with what I've done. I've definitely, I'm very thankful.
That's awesome. Real quick, before we start winding down here, I want to touch on a couple more aspects of this deal. The first is, if you don't have all the details on this, I understand, but from a structure perspective, was this structured as a syndication, a joint venture? How did you guys pull this together?
Yep. So this was a syndication. So there's 3 partners on this deal, and the rest was just raised from high net worth accredited investors. Okay. I'm very proud to say that my mom is a part of this deal too. So my parents have now stepped up and kind of gone to that next realm of the private placement route, which is it's so great to hear and see. And as we distribute, just the joy, or just the next level about it, right? Because when you're looking at normal investing, even when I was growing up, it's like you think stocks, equities, like you put your money in the stock market, the S&P 500, and you let it ride. But lo and behold, there's this whole another aspect of investing in life, and that's in that private placement realm. And to give my parents the access and kind of be a bridge for that next level, I'm so thankful for the position that I am in, and that they can be a part of this ride with me.
Yeah, that's cool. So, what's the plan with this asset moving forward?
Yep. So the plan here is once we finish out the renovation, we're gonna ride it out. We're gonna continue to distribute. Our original game plan, we allotted 24 months for a full turn, and our average rents were around $645 in our pro forma. So we're already way outperforming our projections, and we continue just to hold this asset for another 2-3 years, refinance. And then kind of keep it. It's in a fantastic location here in Lexington. It's in the highest income earning zip code. So it's one of those assets where we think we're going to hold it long term. There's no reason to kind of, sell it off real quick. And I think a lot of the investors going into it, we originally had a 10-year projection. And so they see the long-term aspect of it. And so it's playing out very well. We're still very early in the business plan.
Yeah, love it. Well, this has been great to hear your story, Dylan, about getting started, having some experience in the real estate investing space, but from a distance, watching your parents do it without, a lot of kids that grow up with parents that are in the real estate investing space or real estate brokerage space, sort of keep their keep arm's length from it for whatever reason. It sounds like it was the case for you. You weren't really in the weeds on it, but you were aware of what they were doing, and then later on realized that being a professor of physics and a W-2 job wasn't the right track for you, and decided to go a more entrepreneurial path, picked up the phone, started dialing for dollars and adding value to other more experienced investors in the space, and how you got your start there, making a few phone calls and then finding a mentor that was willing to bring you in and have you be a part of the acquisitions process of his new apartment investing arm of his business, and how you found this 37 unit deal through a broker relationship. It sounds like it's been a great deal thus far based upon the numbers that you provided us, and just a cool story that I think will be inspiring to our listeners that are looking to do a similar thing that you have. I want to start winding our conversation down here, but I've got a few final questions for you. The first is, what's the biggest challenge that you're facing right now in your business that we could all learn from?
Right now, I'd have to say that it is finding deals. Right. And I'm sure that there's many of your guests that say a very similar thing. And like we were talking about, it's the market right now is something where this is all I've ever seen. Right. So I'm still in my infancy. when it comes to kind of acquisitions and commercial real estate and real estate just in general. Now, with that being said, the biggest challenge right now is being able to not getting ahead of myself and like trying to make a deal work just to have a deal work. Really taking a step back and looking at it from an outside perspective, using real numbers. And there's a lot of pricing that is, very high right now. And it's very important and a challenge for myself to not, get out of my shoes, but just stay true to the process because it works. Right. And don't extend past. There's a lot of deals right now. The more professionals that I talk to, the more people that I network with, there's a lot of IO deals going on. And that's something that we haven't been able to really compete with so far, and a lot of bridge terms, and that's okay. So it's just the biggest challenge is staying patient, right? And just keep on underwriting. And when a deal comes, be ready for it.
Yeah. Love it. What's something that you're just absolutely crushing right now in your business that you're excited about, that you're just doing really well that we could all learn from?
Yeah, I would say the reposition. I love this aspect of the business. Being able to, I'll tell a quick little story here. We had a gentleman who has been living at this apartment complex for over 14 years. And he was very worried, when we first came in, that we were going to be, guys from California that come in and just kick everybody out and don't give them, any living situation, bump up rents. And it's a true concern, right? Because there's so much I can do, especially just because I did it for, 9 months straight. It's all numbers, right? When you're looking at it, like a lot of what I've been into is a lot of numbers. And when you're looking at it, you are dealing with people still, and you are dealing with communities, and it's important to understand and be aware of that aspect of the business. And when we came in, we really wanted to be adamant with everyone there that yes, there is going to be change here. The previous ownership, they were very neglectful and didn't pay much attention over the last 6 years. But we're going to be here. We're going to be adamant. We're going to be really making positive changes. And the first things we did was, we gave the building a bath, right? We power washed the entire building. We had a brand new roof put on. We had brand new. We repaved the entire parking lot. We did a lot of exterior door work where we can just, everyone who already, has a unit, they see that we're painting their doors, we're giving them new numbers. They're seeing positive change, right? We're doing landscaping, right? We're trimming trees back. They see that we're doing positive things. And there was one gentleman in particular that I said before that was here for 14 years. And what we did is, when we were going in his unit, it was something that you definitely could see that, it's been a long time and not many people have paid attention to what he's living in. And we were able to take a unit that was just right around the corner, still on the first level, all new flooring, all new paint, right? A fully renovated unit. And we were able to talk with him and put him into that unit, right? Yes, it is more, but there's so much more that he, is going to be getting out of it. Right. And he came up to me about, 3 weeks ago, right before Christmas. And he stopped me. He's like, "Hey, Dylan, I just want to thank you so much for what you guys have been doing here. You guys have really been a godsend to us." And that had no matter what numbers or, and that, whatever happens, like that right there, I will remember for the rest of my life. And that right there is why I'm doing this. And to be able to change someone's life, I want to do it for everyone, right? Because it takes a lot for him to come up to me and say that, and I'm very thankful that we have been able to do that for this community here.
I love that. That's a great way to end the show. Great story to end on. Last question before I let you go is, what's the best way for our listeners to connect with you and learn more about what you guys have going on?
Yeah, so I started posting my real estate journey and our full reposition, right? So all the way back from all the new roofing and closing to getting the keys to now, all the renovated units. I put it all on my story and Instagram. So if you want to go and check out kind of our entire reposition, I pulled it all off for our investors, and it's like 5 minutes, but it shows you everything that we've done. So
Cool.
that's Dylan. Yeah, that's Dylan underscore Palmer 13. So DYLAN underscore PALMER 13 on Instagram, and you'll see it right on my stories. And I continue to post every single day. And then LinkedIn, I'm happy to connect. And then also email or text. So dpalmer@urbanrenewalpartners.com is my email. And then 714-403-9465 is my phone. I know that was a lot.
Oh, that's great. We'll have links to.
Anyway, I'm happy to talk. Yeah.
Yeah, we'll have links to that in the show notes. So if you want to connect with Dylan, learn more about what he's got going on, go ahead and click on one of those links and reach out to him. Dylan, thank you for coming on. Thank you for sharing your journey with us, and we look forward to connecting with you again soon.
David, thank you very much for having me on.